Hey everyone, welcome back. I am super excited today to have this conversation with Jamie Lima. Jamie is a certified divorce financial analyst. You know, I talk about them all the time on this show. He is the founder of Allegiant Divorce Solutions, and he also is the primary financial expert on the platform My Next Chapter, which we have talked about before on the show. Jamie, thank you so much. Welcome to the show.
Thanks for having me.
So, I kind of want to start off with the basics,
Mhm.
like 101. What is a CDFA? How is that different from being a financial advisor, for example? Why do people need a CDFA?
I think the biggest difference is, and I have a background in traditional financial planning,
Right.
as you know, I've been doing that work for 20 years now, and the reality is that a lot of my peers in that space, and even myself, up until getting this designation and working in this area full time now, there's a lot more to divorce financial planning than people think. You know, like
Right.
even when I went through my own divorce back in 2017, prior to me having this designation and starting to do some of this work, I thought, you know what, I've got it, handled. I'm a financial planner, and then you get into it, and you're thinking through things like how do we divide up the assets, and how do I run these calculations, and what am I going to be on the hook for alimony? What is my child support obligation going to be? What about taxes, and how do we handle all those things? The average financial planner doesn't have experience handling those types of nuances in a person's financial plan. So that's why we spend a lot of time partnering with existing financial planners, especially if there's somebody out there that's listening that has a financial planner that they've used, you know, for years and years and years. We'll come in and work with that financial planner specifically on the divorce stuff, simply because they just don't have an expertise in it. You know, they know all the stuff related to investment management and retirement plans and estate plans and insurance and all the other traditional stuff that I've been, like I mentioned, I've been doing that work for years and years and years.
Hmm.
But there are these little nuances that come up in divorce that they're just not trained on. It's not
Sure.
something that it's not, the Fidelities, the Schwabs of the world, the UBSs, Morgan Stanleys of the world. They just don't train their advisors on this type of stuff, because there are a lot of, frankly, it's a compliance situation. If they give bad advice and they're not trained for it, it can open up with them some liabilities. So that's where we come
Interesting. I mean, you would think there would be more training on it given the, proliferation of divorce, but
in.
like most things, right? It is a separate area of expertise, which is
It
why
is.
a CDFA is necessary. What are some of the sticking points? What are some of the areas that you see, or as a CDFA, that you were learning through your designation going, oh, as a financial advisor, I might not have advised them this way, or that was really good for me to learn.
I think there's a lot, and we could probably do a whole show on the pitfalls and the blind spots that people have, especially now that I have the experience both personally and professionally in
Hmm.
this area. But there are things like the after tax value of an asset. You hear me talk about this at My Next Chapter ad nauseum.
Hmm.
We need to understand what the tax impact, how taxes impact the decisions that we make and the value of the investments we have. It's very
Yes.
easy for a financial advisor to sit and say, well, you have $500,000 in your 401k, and there's $500,000 in equity over here in the house. Why don't you just keep the house, you keep the 401k, and be done with it? That's surface level financial planning. And when you take taxes into consideration, you have to understand there's different tax uh, situations with the house versus with the
Right.
retirement account, and they're not necessarily equal. There's also things like pensions that are involved. I have never in my 20-year career seen more pension statements, documents, valuations that need to be done in the last than I have in the last even in the last year.
Hmm.
We deal with a lot of government agencies. We deal with a lot of big name employers that still have pensions. I didn't handle pensions too much when I was working in my traditional wealth management roles,
Right.
but now I'm seeing it. There's a ton of them out there, and there are specific mathematical calculations that need to be run based on actuarial tables and the interest rate environment and employment dates and so all like there's a lot. That is another area that people miss all the time. They just think, well, it's $2,000 a month, so that's what it is. When there's real value behind those income streams, we can go on
Right.
and on, but there's a dozen things that just come
Well,
up all the time.
and pensions, that's one of the sort of areas where a quadro becomes necessary. Yes?
Exactly, exactly. And this is another area that the financial advisors just are clueless on. It's actually
Absolutely.
very simple, to be honest. It's a legal document that provides the plan sponsor the with the instructions of how that asset is going to be divided between the parties. But and you need a special there's a specialization in it, and you have
Yeah,
to there's a ton of training that's involved and so on. We will actually help our clients draft those documents because even the attorneys get jammed up on them.
absolutely. So let's go back. I want to rewind.
Uh-huh. Yeah,
What
yeah.
is a quadro? What does that stand for? It's
Mhm.
QDRO. Can you just sort of let's
Mhm. A
back up a little?
qualified, sure, it's a qualified domestic relations order. It's used in that term is used interchangeably. We call it a quadro. That term is used interchangeably, but they're in the state of Illinois. It's called a quildro.
Oh,
In
okay. I didn't know that.
if you're dealing with government agencies, it's actually called a COPE, a court order acceptable for processing. In any event, if you hear the term quadro, it's a legal document that covers all of those different plans. And basically, what it's not a qualified domestic relations order until the plan receives the documents, has a chance to review them, approves it. That's when it becomes qualified.
Okay. And so basically that is like once that's filed, signed off on, becomes qualified, can you kind of like set it and forget it and then like at retirement when the pension kicks in, you just start receiving money? Like
No,
how does
no.
this,
Okay,
yeah, how does this
let's
work?
talk. Okay, let's talk about the mechanics of it because I think that's a great question and something needs to be clarified. What happens with this document and what we want to try to do with this document is draft it right around the tail end of when we're getting to settlement.
Yeah.
Okay,
Uh-huh.
so you're going to have assuming you either have a mediator draft your agreement, if you draft it on your own or you have an attorney draft it, no matter how you slice it, this document needs to be drafted right when you get basically when you get to the end of it. And
Hmm.
the reason why I say that is because at that point you've pretty much come to an agreement on how this stuff is going to get divided.
Right.
So let's just assume for the sake of our discussion today, that's just 50-50 split between in the pension, or use quadros for 401k plans, 403b plans, workplace retirement type of plans. So not just pensions.
Okay.
So let's assume that we divide them up, just split down the middle 50-50. We draft this document alongside the marital settlement agreement or the divorce decree, whatever it's called, and we want to send that to the courts for approval by the judge first at around the same time, because what you don't want to do is you don't want to send the marital settlement agreement in. That takes weeks. Then you send another. Then you have to march yourself down to the courthouse, have another set of documents signed, which also takes more weeks.
Hmm.
So I prefer to do them concurrently because why not do it when you have the judges get
Yeah.
everything done all at the same time and package it
Hmm.
together. So that document comes back to you. The judge has said, okay, I now approve this. This is a fair and equitable arrangement. Now you or the attorney needs to send that to the plan sponsor. Let's say it's Fidelity Investments. I worked there for years and years. So we send it to Fidelity. It then sits on somebody else's desk for weeks and weeks and weeks until they've had a chance to review it, make sure it's in line with what their plan parameters are and what we've checked all the legal boxes on their side. They will approve it. then they will send it back to you for processing. So in some cases, with some of these companies, will automatically um, handle that at around the time that they've approved it. So ultimately, what they're doing is at that time they're going to divide the accounts 50-50.
Mm-hmm.
You have yours, your soon-to-be ex-spouse has his or hers, and or it's divided up however, whatever the arrangement is. At that point, then you can control what you want to do with that asset. So if you let's say you're going to get 50% of your spouse's 401k plan or the pension, you can choose to turn the income stream on at that point, assuming you would qualify for it, or you'd have to wait till 60 or 65, whenever you can do that. Or if it's a 401k plan or other investment plan, you can take that money and you can go buy a jet ski with it. You can invest it for your future. Whatever you choose to do, you gain control at that point. So
Mm-hmm.
there are a lot. You can see why the average financial planner, nothing was probably like, wait, what? How does this all work? Because
Right,
there are a lot
sure.
of steps, and you have to do them in a specific order, and you have to get all these approvals. And if you don't do it in the right order, then it gets kicked back, and you waste a lot of time. And if you don't take the distribution the right way, then you deal with tax situations. It can be a lot.
And so what if it is a pension? Like, because a pension at a
Mm-hmm.
certain point kind of just kicks in, right?
Yeah.
So how do you, as the recipient of somebody else's pension,
Mm-hmm.
if you're getting a percentage of for a period of time,
Mm-hmm.
right? Because that's the thing too, is it's like it's a percentage of the period of time that you were married, right? Because it may not be the life of the pension, right? If you were only married for a
Exactly.
finite period of time. So how do you know when you're getting that? Are you just sitting around waiting? Are you like,
In some respects, yes, depending on how old you are. But
right.
what we do in the pension evaluations is we will run a calculation and show the spouses, here is the premarital component of this, here's the marital component of the pension, and if there's any post separation value, we would show them what that looks like at that point.
Hmm.
We're strictly focusing on the marital component and
Right.
how that's divided up in divorce. So that's done, like I said, by the quadro, what have you. Assuming that, let's say you're 40 years old and you have 25 years to wait until that income can be turned on at the age of 65,
Right.
you have an account. Those assets are divided up at the plan, and you effectively have an account, a pension plan account at the pension plan. They will communicate with you via email or snail mail, which is usually how they do it, and they will just keep you up to date, and they'll share with you the value of those accounts over time. They'll give you your monthly payment calculations. They'll help you understand, like,
Hmm.
okay, if you take a lump sum, you basically own your own account now, even though you may not have been an employee of that company. You now, by way of the divorce, have an account at that pension plan.
I really need to check my quadro paperwork. I don't think I've heard a damn thing in 17 years from them. I, Jamie, I need to have you look at my
I'll take
paperwork.
a look at it. It's totally
Oh
fine.
my God. It's so funny.
Yep.
You're saying that. I'm like, wait a minute. When do I get that money? Hold on a minute. What?
They should be
I'm,
communicating with you effectively. You now have an account on their platform, and they
yeah.
should be communicating with you.
Uh-huh. Okay. I'm gonna look into this today. Anyway, so I love it when I'm interviewing people and suddenly I'm like, wait a minute.
I was going to say, so there's an ulterior motive to this question. You just wanted to know for yourself how this all works.
Totally. But I know that if I have the question, somebody else is gonna have the question too.
Exactly.
So, you
Exactly.
know. Um, okay, so I mean, I know that like my quadro paperwork was like almost as thick as my divorce,
Yeah,
you
it
know,
can
my
be.
MSA. Like it's big.
Yeah,
And these are complicated, but that you know speaks to what you're saying. This is not something that just your average financial advisor can do for you. Um,
exactly.
so I want to talk about the tax implication thing because this is one of those things that is so complicated in divorce by the fact that I see this a lot with um, division of like property division, where the attorneys will say, you know, you'll just decide, you know, so and so will keep the house, party A will keep the house, party B will, you know, get this other house or whatever the property division is. Nobody is asking, can you afford to buy the other person out?
Uh-huh.
Will you qualify for a mortgage because you have to refinance or assume a mortgage, will you qualify for that, right? The attorneys are just kind of like, well, here we go, we're going to divide this, and I'm hearing from you that it's similar with division of the finances, that
Yeah.
like, yeah, these two things may have equal dollar amounts, but they're not necessarily equal once they've been dissolved or broken into or whatever.
Yeah. And you're not the bash on attorneys, but and
No, they can't be
Renee
experts in
over at
everything.
no, they can't be
Yeah.
experts in everything. And
Right. Yeah.
Renee over at My Next Chapter, she and I always go back and forth, and we joke with each other about this all the time. And I'm like, hey, Renee,
Right.
like, listen, love you. We're not bashing attorneys, but the reality is they just don't understand some of this stuff. Their job
Sure.
is on the legal side, right?
Right.
And
Right.
their job is to help you get from point A to point B, which is ultimately understand where your situation and get you divorced. And to be
Right.
honest, like rack up some billable hours along the way to do that. They're not thinking through what your future financial plan looks like or what your goals and objectives are after the divorce is finalized. That's why I tell people all the time, like, we're going to help you through this experience. And when the dust settles on the divorce and that ink is dried on that agreement, we're probably only about halfway there because we now have to help you open up the right accounts and process the QDRO and look at your investments and what does your cash flow look like and what does your budget look like moving forward. How do we set up the kids for
Right.
success moving forward? Like all these future financial planning things. That's why I there's a marriage between the CFP work that I do and the CDFA work on a regular basis. And one of the first exercises we take people through is what are your goals when this is all over? Because
Yeah.
then we can help you make good, solid decisions along the way to help you achieve whatever those goals are.
Right.
And if you're not paying attention how like if you're not paying attention how taxes impact you, or like you said, like okay, I want to keep the house. Great. Well, if you don't know what your budget's going to look like and what kind of support you're going to have, how the heck do you know whether you're going to be able to even afford it?
Right.
And that's where we come in. The attorneys are
Right.
not going to be able to help you figure this out.
Right. And this is, this is really speaking to why we need a team, right? Because your attorney is also not a co-parenting specialist. They are also, right? Like they are not helping you through all of dissecting all of the pieces of this that are sort of happening they're all happening at the same time. It's
Yeah.
this sort
Yeah.
of concurrent explosion of decision making and you know, uh, legal, financial, emotional, psychological, parenting, like it's all happening at the same time. And you can't rely on one professional to do all of it.
No, it's just like it's maybe a terrible analogy, but I use it all the time, which is you think of your in this particular space like you would your general practitioner, like from a medical perspective, right? Your
Exactly.
attorney is the general practitioner. They
Mm-hmm.
know the legal system, they know what the process looks like, so on and so forth. And your general practitioner is going to do your annual physical, and they know that they're going to try to keep you on the right path moving forward. But if you have a significant ailment, you have unfortunately like cancer or this health issue or that health issue, they're going to send you to a specialist to help you with that thing
Yep.
in coordination with the general health path that they're trying to keep you on. I don't know how to best say this, but that's exactly how you
Yeah.
want to look at us. Is like, let's get your attorney's totally fine. Let's get them, keep this thing moving forward. But when it comes time for these other areas that you need help in, you need to be reaching out to these specialists to get the help you need in those areas.
Yeah.
And it sometimes sounds counterintuitive to work with this team U is what I call it. It may sound counterintuitive to have an attorney, financial planner and everything else, but if everybody stays in their lane, usually the outcome is much better and you save money because everybody's more effective and efficiently working effectively and efficiently in their particular designations.
Exactly. Exactly. I was going to say, like, you know, attorneys are expensive enough. And then here we're saying, well, you also need a CDFA, and you also need a co-parenting specialist, and you also need a divorce coach. Hello, get yourself a divorce coach who's also a co-parenting specialist. You're going to save money. So that's
Exactly.
hello, that's me. Um,
Hmm.
but it's like such an expensive proposition. And as you're saying, the goal is to sort of spend money to save money.
Exactly.
That right. I've had clients literally say that I've saved them, like found them over $100,000 in
Hmm.
assets that they didn't know about, or saved them at least tens of thousands of dollars by not by being streamlined, me helping them be streamlined with like, no, 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 you don't need to talk to your attorney about that. We talk about that. These are the questions you need to ask your attorney. So that's one phone call, not five.
Yeah.
Right.
Yeah.
Yeah.
Well, we just we I shared this on social media over the course of the last couple months. We had one case where we found $400,000 for this one gal, and this most recent case, this is a same-sex marriage here in the state of California, and they were kind of going back and forth on and almost ready to sign the agreement, and we found almost $1 million that was not being accounted for in the agreement, and they were getting ready to sign.
Wow. Was it
And you're
being
talking
hidden or just like they didn't think about it?
they fat fingered a number on the disclosures.
Oh,
There was $400,000 missing in one section of the disclosures that they were providing each other, and the pension wasn't being evaluated correctly.
oh boy.
They had the pension down to somewhere in like the neighborhood of like 430,000 when it really came out to well over 1 million.
Wow.
So I went back and we basically drafted a whole response like here's every section of the agreement, and like this is what we recommend and this is what you're missing. The other piece of this too was he was getting ready to sign over the house to the spouse, and they were going to exchange. There's going to be some equalization of some other assets to be able to do that, but there were no terms on when does he have to refinance, when does he get his name off the thing, what
Yes.
happens if that doesn't happen, all the stuff. And I'm
Yes.
like, why this your attorney drafted this document? What is wrong with this attorney?
Yep.
Can you imagine
Yep.
if he went like what if 2 years goes by and all of a sudden he
That's right.
realizes he can't afford to keep the house and he decides to go into foreclosure and you're on your ex-spouse's house and your credit is
That's right.
screwed.
That's right. That's right.
This
Yep.
was a $3,000 investment, and we found those issues along with others, and then $1 million in assets. It's a no brainer.
Absolutely. Absolutely. I'm so glad you said that. I have clients that, you know, for example, I had a client whose attorney uh, got a exclusion order to get
Mhm.
her abusive spouse out of the house, but at the same time drafted no temporary support order, no temporary custody order. There were no parameters around this other than he can't come to the house. Well, how is
Mhm.
he going to get the children? Where is
Yeah.
like is she walking the children to the end of the street? Is that safe? How often is he allowed to see the children? How is she supporting herself if he takes all of the money now that he's been excluded from the home? Right? None of these things were taken into consideration, into account until she told me about it. And she told me that they had drafted this order. And I was like, your attorney also needs to file all these other things because these are all these questions that are going to leave you more vulnerable than if the guy's just in the house.
Uh-huh. Overlooked. Overlooked.
Exactly. Yes.
Who
Mm-hmm.
is doing what by when, and what happens if that thing
Yes.
doesn't happen?
And what happens if it doesn't? One of my favorite
Exactly.
things to always make sure is included is if not, if I have to take you back to court to file a motion to have you do the thing, you are paying all attorney fees for that.
Exactly. Exactly. What is my
Yeah.
recourse? And you always want to
Yes.
know that, and it's missed all the time.
Yep, absolutely. Absolutely. Yeah, I'm glad you said that. Oh my gosh. So there are so many pieces, right? And this is why you need a team, right? You
Yeah.
need I think you just said in one of your another interview recently something about like get a second opinion, right? Get second eyes on it for just that reason. You get second eyes on
We do
your
it all the time.
MSA and you find shit and it saves you money.
All the time. All the time.
Yeah.
I had another case that she was going to sign off on the agreement, and he's a $1 million life insurance policy involved, and she thinks everything's going to be copacetic and everything else. But what we found out that he's a smoker. He's not going to be able to he's not going to be able to get insured, and there's only $2,000 left in the premium in the actual cash balance of that insurance policy. So that policy was going to lapse within 6 months.
Wow.
and she's going to lose all that coverage if something happens to him. He's not insurable. It's a
Right.
disaster. And the attorney's like, well,
Interesting.
here you go, sign off.
Right. So there are all of these implications, and we started talking about in the beginning the tax implications, right?
Yeah,
This is something that comes up with my clients all the time, and there's always disagreement, of course, between the parties about who's responsible for the tax burden of, like, if I am, getting the, $500,000 retirement account, but we're kind of having to break something up in order to transfer that, and there's a tax burden, who's responsible for that? I think I'm getting $500,000 because that's
yeah,
the agreement, right? My spouse thinks they're giving up $500,000 because that's the agreement. Somewhere in there is a right is a penalty.
yeah.
Somebody's got to pay. Who pays that?
And the answer is it depends. And I think it depends on a lot of cases in the type of accounts. If you're gonna divide retirement accounts between spouses, there's no tax liability. There's only tax liability when you take money out of those accounts
Right.
later.
Yes.
So
Right. Bad example,
let's
but yeah.
no, that's okay. So
Yeah.
let's stick with that though. Your example about the $500,000 if you think you're getting $500,000, the strategy here is I need to gross that number up to ensure after tax I actually get $500,000.
Mm-hmm. Okay.
You with me on that one? And
Yeah.
so
Totally.
the in other words, and that was the another point that I made to the gentleman in the $1 million scenario. He was going to get $400,000 as an equalization payment out of the husband's IRA, or I'm sorry, out of the husband's 401k.
Mm-hmm.
Money's going to go over, no problem. But I kept explaining to him like it's not really $400,000 because eventually you're going to have to pay taxes on that, so it's really worth like 325 if you're
Mm-hmm.
lucky. So
Uh-huh.
we need to gross that number up. So I told my argument back was you're asking for 525. 525 minus 25% tax is going to get you down to the $400,000 that you actually should net in this deal. And that's how you have to think through retirement accounts is like you're right. The IRS is going to come calling one of these days. And if you truly need an equalization of a particular dollar, that number needs to be grossed up so you net that number. When you're dealing with other assets, homes and investment accounts, stocks and bonds and those types of things, those you're dealing with capital gains issues in that respect. Usually, those tax liabilities are handled just by the way that you transfer the property between one another and so on. So you can usually try to eliminate some of those, but
Mm-hmm.
um, you're likely going to pay taxes when the asset is sold later, depending on what the cost basis is and so on. So we've got to pay attention to all those things. But the main thing is with if you want to gross up any numbers on the retirement side, that way you
Mm-hmm.
actually net what you think you're supposed to
Right.
deserve it
And
of.
so the argument for that is if this is equalization,
Mm-hmm.
then I have to have $400,000 net,
Exactly.
right? Because I can see the argument on the other side be like, well, if I'm paying $400,000, why do I have to pay 525, right? And the argument is because we're talking about equalization,
Exactly.
we're talking net, we're not talking gross.
Exactly. Because in his
Yeah.
situation, he's thinking in his mind he's getting 400 grand, but after tax, he's really getting like I said, 300, 325, depending on what his filing status would be and tax situation in the year he starts taking distributions out. But you've got to factor that in, and it doesn't feel good when you're the one making the equalization payment, but it is the most fair and equitable way of doing
Mm, mm. Which is, a hard pill to swallow when you're getting divorced
it. It
and
is.
there's bitterness, right? We're not always thinking like, oh, this is actually the fair and equal thing to do,
Yeah, yeah,
right?
yeah.
Yeah. Um, so what other things do you cover like as a CDFA? Like what other things do you see or mistakes that you see people make that you wish people knew more about?
we cover a lot. I mean, we if it's related to the financials of divorce,
Hmm.
we're basically going to touch all of it, right? Um, I think, and we just did a whole webinar series at my next chapter on this regarding the budget,
Mm,
but it is so elementary, and people look at it like, well, like I don't really need a budget. I never lived with a budget. I didn't have a budget my whole life. Why do I need a budget for my new life? But literally every decision you make in divorce stems from understanding what's coming in and what's going out.
right.
And if you don't take the time, if you don't take a beat, sit down and go, okay, like what is my new life going to look like? You're in many ways you're in a less of a power position from a negotiation perspective.
Mm, hmm. Sure.
You may settle on a support number that's not going to get you to where you need to be. You don't know what kind of support you're going to get from child support and spousal support. All that stuff is predicated on the need that you have, the amount of income that you have coming in. And if you don't know all this stuff, you're you're kind of grasping at straws,
Right.
and you may end up in a situation where you have a house you can't afford, you have more month than money, which is a problem for all of us that probably some point in our lives. Um, and the goals and objectives that you have for your future can't be achieved because you're just not preparing,
Right.
and not taking that initial elementary step is huge.
Mm. And it's hard. It's icky. It's a really hard and painful thing, I think, to look at, right? To have to sort of sort through. Um, and do you have like tools and things like that in my next chapter that help people with their budgets?
Absolutely. We have the worksheets that are available. We have
Yeah.
the balance sheet that's on the site. There's a lot of
Hmm.
amazing resources and worksheets that are available. In our last event of this past Monday, we walked everybody through each of the sections and just shared like, okay, here's in this particular category, this is what we need to be thinking about. Here are some of the roadblocks. Here are some of the things that people miss all the time. Don't forget to add this thing in. And we literally took it one step at a time.
Hmm.
Um, we probably could have done a 2 hour session on it and got really, really detailed, but I think we did a pretty good job in the 40 minutes we had, 45 minutes we had. But I would, on the website, there are a ton of resources that are available. One being the budget worksheet.
Yeah.
It's kind of the foundation for everything on the financial side.
Yes. 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 So Jamie, your position with my next chapter, you are the financial CDFA guru. There are obviously webinars and worksheets, and you do videos and informational sessions and all of that.
Mm-hmm.
And where else can people find you besides mynextchapter.com, which
Yeah.
is, where you want to go for all things, but where else can people find you individually?
Yeah, I think on our website is the best place to learn more about the work we do.
Hmm.
Contact me if people have questions. I'm always happy to help. Right? Like, I mean, there's been a million times when people have reached out asking quite random questions, and if I can answer the question, then I will certainly do so. If I need more information, some people are like, "Well, can I keep my house?" I'm like, I don't have any
I don't
idea
know.
if how to answer that question. Like, what do you? It would take weeks to answer that question, from
Right.
a fiduciary perspective. But if people
Right,
have
right,
questions and
sure.
need access to resources, I can certainly point them in the right direction. If we're not a fit, I'm going to tell them, let them like, hey,
Hmm.
listen, we're not. This is not a fit for us. It's not a case we can take on. But here are some other resources, or here's some other folks that might be able to help. I'm always happy to help in that regard. But the
Yeah,
website is allegiantds.com, allegiantds.com, Allegiant Divorce Solutions, and all of our contact info is on there. You can follow us on social media there as well. I try to do my best to put out as much educational stuff as we possibly can on a recurring basis. TikTok, Instagram, the whole thing. We're on all of them.
great. Awesome. Awesome, Jamie. And you can work with people like CDFAs are not don't have to be state specific.
That's a
Is
good
that
point.
right?
No, we all 50 states, because we don't have to be legal experts in every state or in know every single statute. As long as the
Hmm.
maths in 2 plus 2 is still 4 in New Jersey and South Dakota and Texas, we're good to go.
Debatable these days, but never mind. All right, Jamie, thank you so much for being here. This has been a great conversation, very enlightening, and I hope super helpful to our audience. So I appreciate you being here.
Thanks for having me, Kate. Talk to you soon.